client investment strategist with Goldman Sachs Asset Management. Elizabeth, we've been trying to kind of make sense of all of this, commodities-wise and everything else. It sure seems like if you look at agricultural commodities, if you look at energy commodities, especially places like natural gas, it's not, I wouldn't say deflation, but it certainly doesn't look like inflation, right? It's not deflation, but it's not inflation either. What exactly does that tell you about how the markets are setting up for the outlook for inflation?
Well, look, my comments on commodities and why I think that they would be helpful in a portfolio are less of a reflection on that and more of a reflection on what we can do to protect our portfolios going into next year. If you think about last year, about 95% of assets were correlated with the equity markets, which means basically dollar cash is the only thing you could really run to. This year, we think that there's going to be a bull market in oil, for example, and we do think there are places where you can run and hide is probably the wrong word, but look for protection. And part of that is in the commodities market. Part of that is coming from the China reopening and, sort of the abatement, at least for now, in the energy crisis in Europe.
Okay, so China is obviously a very big part of the story because they're the world's second biggest economy, the biggest importer of oil out there, the second biggest user of it to the United States. But is the entire commodity story about just energy right now? It's gotten so much attention. But what about places like in metals? People used to talk about copper on the China reopening. Can we talk about those types of commodities in the same breath as we talk about oil and nat gas?
Well, I don't think you can put an entire asset class into one bucket and just say in general you should just go out there and buy commodities. And I don't think that we'd advise any of our institutional clients to just buy, a blanket basket there and hope for the same outcome. We're not projecting everything's going to go up, double digits there. But I do think there'll be winners and losers from the China reopening and from the importers and exporters story around that. So I think you can pick your spots, and I think there will be opportunities to earn a return there that you haven't seen in a long time. Part of the problem, though, is there are a lot of portfolios out there that do not have strategic allocations to commodities, and that's very hard to add to in the short term, especially if you're confused, like many folks are out there, what commodities to add at this point.
In your estimation, how many of those client portfolios out there, in your expert opinion, are underinvested in things like commodities?
I would say the shift probably happened about a decade ago, where a lot of large institutional investors backed out of their strategic allocation to commodities. And as you probably know, the public pension world, for example, it's very hard to make tactical decisions quickly. And so I would say very few. I could probably name a handful that have strategic allocations to commodities.
So, Peter, the commodity story, is it enough when you see charts for things like natural gas, when you see charts for things like wheat and corn, when you see charts for things like even egg prices, which have been sky high through all of last year, coming down? Is it enough for you to call a peak in inflation?
No, because to add to what Elizabeth said, I think the China reopening is a huge deal. I mean, this is 17% of the world's population that has been locked up for 3 years. Oil consumption in China in 2022 on a per day barrel basis fell to the lowest level since 1990. In 2023, that demand for daily crude oil will go to a record high. At the same time, we still have all these supply issues with getting this stuff out of the ground. Not necessarily the ability to get out of the ground, it's the willingness to get out of the ground that has obviously changed. So I think that we should treat the China reopening no different than how we reopened here, how Europe reopened, how the whole world reopened. They want to make up for lost time, and I think that consumer demand is going to lead to much higher commodity prices. And when I see those charts with these prices lower, it tells me that, okay, we've had the pullback, and it's time for them to go higher again.
Elizabeth, in a former life, you ran one of these pension systems for the state of Hawaii.
Yeah.
So you were a buy-side investment officer, chief investment officer, and now you're kind of showing the other people in the buy side what exactly they should be looking at.
Sure.
So what are they missing right now? What is the institutional community missing right now about the economic narrative and the market narrative? We just had a big discussion about the disconnect right now between the jobs numbers and what the market reaction is or could be.
Sure. I think missing is probably a really tough thing to say. What I would say is that they're a little bit conflicted. The portfolios in a hard landing scenario and a soft landing scenario probably need to look a little bit different. So I think where they're trying to focus right now is where are some of those assets that might be able to hold up in either sort of scenario. So it's not that they're missing anything. It's just a very tough position to have been in after a decade, 2 decades, of the past environment we had, especially on the bond side, as they play such a large role in public pension portfolios.